All right. Hi, everyone. Welcome to the IXS Real-World Asset Tokenization Masterclass. My name is Julian Kwan. I am a co-founder and CEO of IXSwap and also IXSwap sister platform InvestaX. I'm going to get into that in a quick sec. Quick shout out to my cousin Andy. I'm drinking from the IXSwap coffee cup. Oh, there it is. The purpose of putting this out, and thank you to my team for helping put this together, is to cover the entire spectrum of the RWA industry that used to be called the security token industry, which started in 2017-18. We were the first people in Asia to focus on this industry. And there's so much going on. There's so much development. There's so much confusion. There's so much misunderstanding. I'm going to try and break it down for the IXSwap community and anyone else who ends up listening to this, and take you on that journey and hopefully make it an exciting story, which it is an exciting story actually, and take you through all the different elements from the history of the industry, the players in the space, the different types of models, the different types of RWA tokens, different types of protocols, what's needed to issue and launch these RWA tokens, what's happening in the industry. And I've done my best. I've got about 90 different slides. This is not a short recording, but let's get started. So just a quick one. First and foremost, this is really for our crypto degen community. Real-world asset utility tokens are not the actual real-world asset tokens. So the cryptocurrency utility token of a platform, like IXS token, which is the utility token of IXSwap, that's not actually a real-world asset token, although in the crypto industry, it's called an RWA token because it's the utility token of a platform. So the actual real-world asset tokens are the equity tokens, the debt tokens, the real estate, etc. They sit behind the platform, which you've got to go on and buy. So that's the first statement for everyone to understand. The cryptocurrency real-world asset utility tokens, including Ondo, Pendle, they are not actually real-world asset tokens. So there's two things going on here. There's the crypto tokens version and then the actual real-world asset equity tokens. So we've got a long way to go. A quick breakdown. I'm going to go through all of this so you guys can take your own notes here. We're going to run through this first section here. There's 4 sections. I don't know how long it's going to take. I've locked my office and turned off my phone so I can make sure that we are here for the whole thing. Let's just jump into it. These are what we're going to go through, the types of tokens, the assets being tokenized, and we're going to end this section on stablecoins. So just a quick one, why you should listen to us and bother taking this a journey with us. We're the first in Asia looking at this. We have the best team. We were the first licensed platforms building on public protocols, and we now have, I think, 8 or 9 public protocols that we integrated with. Recently, XDC BNB, which is news coming out now. Alice is a co-founder. Aaron's a co-founder. We've got people across every skill set: legal, tech, private markets, cross-border investments, technology, smart contract engineers. And we're backed by some of the best investors in the world, including Coinbase Ventures, Spartan, UOB Bank Ventures. So we've set up these 2 platforms. InvestaX is a Singapore licensed tokenization platform, so it has a broker-dealer and exchange license, and any company can come and co-brand a section and issue and trade any of their tokens. It's a one-stop shop with KYC wallets, etc. That's out of Singapore. IXSwap's a sister platform. We call it the Uniswap of real-world asset tokens. It was built as a DEX for secondary trading, and differentiating itself from Uniswap, it actually has broker-dealer and crypto licenses, so it can legally do pools and legally do trades of real-world asset tokens, equity tokens, which Uniswap can't do. And we also got completely licensed up and has a launch pad and a whole bunch of other services out of Bahamas. So, and these are some of the amazing companies that are backing us. Just mentioned a few. So hopefully that gives you a quick overview, if you don't know us, about who we are and maybe why we're worth listening to at least. We've been at the forefront of the industry. We've completed multiple world firsts. Some of them are listed here. I'm not going to read every single one. Tokenizing our ESOPs, the first tokenization of the Singapore fund vehicle, the VCC, We created the first real-world asset equity token liquidity bootstrapping pools, the first courses on this, the first automatic maker DEX swap for secondary trading of real-world asset equity tokens, and a bunch of other really exciting things that are coming out. So let's just do a quick overview. Digital assets, different types, cryptocurrencies, I think pretty self-explanatory these days. ICOs, utility tokens, all sit in the cryptocurrency bucket. Then we've got stablecoins, which I kind of put in this bucket because stablecoins are essentially, today I'll really just mainly talk about the US dollar-backed ones. There are other ones, but they don't pay any interest, so it's really just a one-for-one representation of a dollar. They sit in one bucket. There's other types of digital assets like NFTs, non-securities like non-fungible tokens, NFTs, art, etc. And then there's a real-world asset token bucket, which actually has a couple of different types. So we'll get into that. Like there are different types of real-world asset tokens, like completely different types, and that's probably why there's a lot of noise, and it's quite hard for people starting in this industry to really get heads around it. So I like to go back here and look at the history of traditional securities markets and the history of where we came from to get to real-world asset tokens today. When I talk about real-world asset tokens, I mainly refer to real world equity, debt, real estate, private equity. But the very first kind of public shares, I guess, was way back in 1602. So what's that? 422 years ago. And basically, it was very expensive to build these ships that delivered all the trade around the world. So some people started selling shares in the ship, right? That was the very beginning. Then we had the first couple of stock exchanges way back in 1801, London Stock Exchange. I think there was one in Luxembourg, somewhere in Europe as well. And that's where you could come and start to trade pieces of paper, boards of chalk, 9 to 5. Probably wasn't even that long back in the day. And then, you had the development of electronic stock exchanges, NASDAQ, New York Stock Exchange. That's when we went from paper into digital, and a dramatic increase in volumes and access, because now all of us could trade, via phone or on computers, where before you had to be on the floor of the stock exchange. So that was a huge development. And then we had, the very first ETF in 1989. I like to reference that because essentially that was a new technology that married with an asset marketplace. So a new form of wrapping a certain asset. The first one in 1989 was considered a failure. I believe they raised $6 million, and then everyone went, it probably cost them double that for legal fees. Now the ETF industry is a $7-8 trillion asset class. I think, I truly believe that tokenization will develop the next version of the ETF, and many, many, many more. But that's why I put it out there, because we've been, a young industry, a new industry, small volumes, sometimes strange assets, no different from every other industry in the world that begins, right? And then, of course, we have the king being born in 2008 with Bitcoin, Ethereum 2013, and then that really started the spurring off the ICO boom in 2017, where everyone can launch their own token. This was a really important moment in time. It's when myself and my founders and my team, we started to get very excited about RWA. So again, RWA, when I say it out loud, to me is RWA equity tokens, security tokens. In 2017-18, the very, very first RWA came out, and they used to be called security tokens, and they were called STOs. So the very first STOs came out, and we immediately thought, all right, we run this online investment platform, but it's basically behind the website, it's paper. That's how we started the InvestaX platform in 2015 as one of the first real estate online investment platforms. When we looked at the ICO boom, we saw this transformational way people were exchanging value everywhere. All you needed was your mobile phone, essentially. So we should use this to wrap the real assets. And again, at the time, we called them security tokens. That was the beginning. So essentially, you probably can mark that as the essential beginning of the RWA industry. We're now essentially 6 years old. So in 2018, we had a very difficult birth. Failed ICOs that were selling themselves like securities. Excuse me for a minute. My dog's scratch the whole door down. So in 2018, you had like a couple of things happen. People were launching ICOs, but they were adding securities features, right? It has interest, you get a share in part of the business. And so what happened was then that the US government, the SEC, also started issuing fines to people. They were the main guys, saying you've launched this ICO, it has securities features, therefore it's a security token, therefore it's illegal, you had no licenses. So there was a lot of drama, and then you had this huge drop in the cryptocurrency markets. And you know, at the time, we immediately thought we should use this technology to wrap the real-world assets in a world of digital currencies. You're going to want a world of digital securities, security tokens, real-world asset tokens. They've also been known, RWA has also been known as digital securities for a while there. So, so that made a lot of sense to us. Why would you not want to take your startup share, your real estate fund, and put it in your phone or your wallet and run it alongside your Bitcoin, your USDC, etc. So we went full tilt in, full steam ahead. It was a huge risk. No one was really doing it back then. A lot of the banks were talking about it, but they were all issuing on their own private chains. No one really cared. It wasn't really blockchain. That's my opinion. People can argue about that all day. But we went, we've got to go and build on chain, because that's the whole point of this. And if you're not on chain, how are you going to connect with all the other assets? And that's where all the value is going to come. And that's where all the innovation and the brain power and the new assets. So, and ultimately, we always believe that the most exciting area for distribution for RWA would eventually be on cryptocurrency exchanges and DeFi wallets. And that's something that we're doing right now. I'm just making a note. Please get puppies away from the door. Scratching. So what is that? When that happened, you had this moment over a couple of years. You had the very first RWA platforms. Some of the names that ring out, T0, they were like a RWA exchange, if you will. You had token issuance companies. They help you issue a token, but that's about it. Then you had, a whole bunch of individual service providers. And one of the big challenges for many years was a lot of them were doing private chain. So throw that idea out the way. There's the private blockchain model didn't work, and that was a failed experiment. But so that was one issue. Then you had someone doing just custody or just token issuance or just exchange, and they weren't connected on the same protocols, and they weren't connected business-wise. So it was very, very clunky, and it had a lot of issues. We built through that, and we actually applied for one of the very first real-world asset exchange licenses to add to our broker-dealer license at InvestaX back in 2018. And it basically said Bitcoin buys a STO. That's what we thought. That's what we believed in. And we, went under the bus for 5 years to make that happen. And so along that journey as well, you had the development of DAOs. You had the development of NFTs. And why I bring that up is because what you could see then, if you look at Bitcoin, Ethereum, ICOs, DAOs, NFTs, et cetera, that this transformational technology was going to continue to evolve every day. So there's going to be a continual development of new assets and features and structures and products and services. And so that's why I think it's incredibly exciting for the real-world asset space, because you have all of that excitement, value, energy, brain power, intellect. And then you're marrying it with trillions of dollars of real-world assets. It's just, without a doubt, the biggest opportunity in finance. And now, everyone seems to, many more people have kind of worked that out. So if we take that journey a little bit further to get through the slide, in 2021, everyone was talking, from 2018 to 2021, everyone said real-world asset tokens, liquidity for liquid assets. It was the only value proposition. Didn't make sense. Didn't take into account all the other things around a particular asset, what asset, how big, who buys it, where's it trade, et cetera. But what's the performance? And it was this blanket statement that the industry was not delivering on it, right? Because there was no liquidity. There weren't any market makers. Crypto market makers couldn't make security tokens, and securities market makers were trying to work out what the hell blockchain was. So we were in a bit of a pickle there. We're stuck. So we we brought on some new partners, Aaron and a few others, people, and a lot of other people. And we decided, all right, if you look at the cryptocurrency market in 2017, there was quite a lot of liquidity for big coins, and that was really only on the sexes, right? Binance, Coinbase, I'll use as the examples. And for 10,000 altcoins, there was nothing. The DEXs used to be nothing, right? Because there was no market-making solution. So it was just a listing board. It was like Craigslist for tokens. So the real innovation and one of the best, still greatest players in the whole space, I think, or at least models, the automated market maker, the DEX model, which I'll use Uniswap today as the leading DEX. They came out around 2017 and said, look, we've got this new system with a smart contract. Anyone can bring two crypto, i.e. their altcoin and their whatever paired coin. They can start their own liquidity pool. Anyone who owns those tokens can join in that market making pool and share in liquidity fees. And then anyone who comes to buy at the front of Uniswap will now have some liquidity. So crowdsourced market making, technology driven, everyone can participate, any asset, right? In brackets, you still got to onboard Uniswap. So that was an incredible innovation, and I'll show you a few slides later on that shows the volumes of what that did to the volumes of centralized exchange traded crypto. So why am I telling you this? Because we were looking at this saying, we believe there's going to be 1,000 times, if not 10,000 times more RWA tokens. Most of them don't belong in a centralized RWA exchange. Most of them are never getting in a market maker, but why don't we build a system like Uniswap with exactly the same user experience, plug it into some licenses and let anyone with an RWA token start the first liquidity pool. That's what IXSwap is. I think it's a killer app for the whole space. IXS token is the utility token for IXSwap. That was the first liquidity solutions in the space. Right? So moving along, we've had ups. Then we have the DeFi meltdown. And this is important as well, and why it's on here. In 2022 and around, before and after that, we had the big collapse in crypto, the most recent one, Luna, FTX, Bitcoin to 16,000 from something much higher. And one of the keys, and what was happening around then was also the concept, one of the big concepts of decentralized finance, which covers a lot of things, Bitcoin's decentralized finance, but I like to consider decentralized finance like the services that were put into the cryptocurrency market. So what does that mean? So there was Bitcoin and Ethereum and 10,000 altcoins sitting there, just purely speculative investments or why people would buy, but you couldn't do anything with it. Right? So along came DeFi, and you could stake them, and you could borrow on them, and you could lend on them, you could use them collateral. That's all banking services, really, financial services. But when when those services came to the altcoin crypto markets, it made it insanely more valuable. Right? You could do more things with these assets. So the reason I reference that is because in 2022, there was only ever stake ABC token, get ABC token rewards. So stake crypto, get another crypto back. That goes great when it goes up, and when the market's tumbling, that's a house of cards. So there was hundreds of billions of dollars of stable coins, USDC, USDT, earning nothing. Right? They've got the USDT, USDC. I think they're the two big dogs. They don't pay any interest, but they're key payment rails for the whole industry. I look right now, Tether's number 3, USDC's number 8, BUSD used to be up there. So up until recently, 3 of the top 6 or 7 coins were US dollar stable coins. That's how important they are. They didn't pay any interest. So back in 2022, some people decided, and thank God they did that. It's quite ironic they did this, but some people said, right, what if we put on treasuries on chain? Not on private chain, because no one cares, but on chain. So those guys with those stable coins, there's hundreds of billions of dollars of them, can earn yield because they're earning no yield. At the time, due to economic conditions, treasuries paying 5-6%, and all this money started piling across, right? And then that was a real important moment for the industry, because up until that point, most of the crypto industry went, real-world assets, security tokens are stupid. What's the point? Have to do a KYC to buy something, and they just basically were haters. We were laughed out of all these conferences, and it took many years for people to start to see what happened. But that was the moment when the crypto industry really woke up and went, aha, these things are really useful and valuable, and what else can we do? Right? At the same time, Larry Fink and Wall Street Brotherhood started getting on last year, started getting on Bloomberg and saying every single asset in the world's going to be tokenized and it has to be on public chains. You know, at the same time they launched the Bitcoin ETF. So you then kind of, in brackets, overnight, not really, but overnight you had the whole crypto universe and the whole of Wall Street at the same time going, aha, penny drops. We need to get into this, right? So that was a huge moment. And now, over the last year or two, we've now had this, specifically this year, this explosion of companies and fund managers and asset managers tokenizing much higher, better quality assets. And just as importantly, you have the crypto and the DeFi players coming into the space. What does that mean? Right? In 2021, Bitfinex, Binance, and FTX actually launched the first tokenized stocks, which were securities, they were real-world asset tokens, but they didn't have any licenses, so they pulled them down. And but for us, it was all very obvious that just like banks who start with deposits and then sell mortgages and insurance and everything, they want to sell more stuff to their users. The crypto guys are going to do exactly the same thing. And when the hundreds of millions of users in these crypto exchanges or the crypto exchange bosses realize this, then they're going to have to partner up and plug into licensed venues that have the tech and the assets to be able to legally compliantly sell them. Now, there's a ton of cryptocurrency exchanges today selling illegal RWA, but the better ones are trying to do it properly. Actually, just in the last couple of weeks, Crypto.com has bought a broker-dealer in the USA, Australia, and Mauritius because they want to put a big focus on RWA. And you can't launch these RWA in a crypto exchange if you don't have securities licenses, broker-dealer license, crypto exchange licenses, and securities custody. We'll get into that later as well. My point is that the crypto industry already was very much focused on this. And we took investment from Coinbase in 2021. And I think there would have been a lot more development, although Coinbase is building an RWA exchange in Abu Dhabi, if they weren't under attack by the SEC the last couple of years. Anyway, we all know in the last 10 days that's completely changed and everything's completely changed for a positive light. But the point just to make was the crypto guys were here first, almost. And then the Wall Street guys, the TradFi guys, finally understood that we've got to build on chain and do something real. Our own closed world private blockchain means nothing to anyone. So here we are in the year 2024, where both sides, TradFi and DeFi, are converging on the real world asset industry, and that's fantastic. That's where we built what we built. I could keep going on about that, but we need to get through another 80 slides. What are the challenges for real world assets issued on paper? A lot of things, right? Like just an example, you invest into a VC fund or a real estate fund, you might wait 7, 8, 10, 15 years to get an exit. You can't typically trade it. There's no transparency. You don't know who owns what. Often valuations is completely private and pushed out once a year or even less. So there's just a whole bunch of issues. And the analogy here is, what's the difference between publicly traded assets and private market assets? And the publicly traded assets, like the stock exchanges, are essentially digitized and have these benefits of transparency and tradability and all the good stuff that comes with being a publicly traded asset. The private markets had nothing. So that's been the challenge. And I think ultimately the RWA industry, if you will, which combines many things, technology, licenses, has the most to offer the private markets, which are 8 to 10 times bigger than the public markets. At the same time, there's so many use cases coming out for tokenizing financial instruments and publicly traded assets so they can be used in different ways. You could do a long talk on that one alone. But anyway, kicking on. So then what's the benefit of tokenizing real assets? You know, there's the 101 of this, which is blockchain, right? Digital ledgers, transparency, immutable transferability, you know, much smaller investment quantums, etc. But I got 4 other benefits for you guys that I think in their own right are completely massive new industries in their own, right? So what's being tokenized in the real world asset space? Everything. Shares of companies. I'll just name what we've done. Private credit, private debt, real estate, venture capital funds, private equity funds, startup shares. What else have we done? ESOPs, employee stock options, tokenize their ESOPs so our team can use them. So there's people tokenizing stocks. Why? Not for anyone in a developed market that can buy them. It's for the emerging market people from Indonesia, Philippines, Nigeria. They can't go and buy a stock of Apple on NASDAQ, so they can buy a tokenized stock on an RWA platform. So, again, like everyone has to completely open their minds to where this is going, because that's a lesson that I get my ass handed to me once a week when I go, oh, well, this is what that does, and then I realize, oh, hang on, it's just been completely flipped on its head. How these assets are accessible, who can access them, what you can do with them, where you can take them. They're the questions that now need to be asked on top of every single industry. And that's why this industry is just about to explode, right? So there's going to be a lot today, and hopefully I've tried to make this as simple as possible, terminology-wise, breakdowns, so here we have on this one, different types of tokens. So, you have fungible tokens, Bitcoin, Ethereum, you have non-fungible tokens like BAYC, CryptoPunks, one of a kinds. You have different types of, people tokenizing different types of assets, right? So that was, I'm going to say this is what it looked like a couple of years ago, right? And now, looking specifically at our industry, the real asset tokens, we actually have a few different types. So let's start with the ones that everyone knows best, and maybe the only ones people think exist. Utility tokens of RWA platforms, all right? IXS is the best example for me because it's a utility token of IXSwap and InvestaX. Now, it's a cryptocurrency. It's not a security. It's not a real-world asset. It's not equity. It's not debt. It's not real estate. It's not everything, right? If you go to CoinMarketCap and CoinGecko, they have RWA token sections, right? They are actually the cryptocurrency utility tokens of the RWA platforms. Those tokens themselves are not real-world asset tokens, right? Big distinction. So we have two major markets in the real-world asset space. You have the utility token RWAs, and then you kind of have all the other RWAs, right? So I'll get further into this as we go. And then you have, again, what most people, especially outside crypto, consider RWA real-world asset token, real estate token, share of real estate, private equity venture. People from TradFi don't even like the term RWA, risk-weighted adjusted assets. Already got an acronym and its own term in traditional finance. But anyway, we didn't come up with any of these names. If people want to get upset, we just have to rename everything in our website every year or two because the industry changes its name. Security tokens, digital securities, real-world asset tokens, RWA, STO. Hopefully it doesn't change again. There are other types of real-world asset tokens, like commodities tokens. Right? They're not securities. Gold, silver, copper. They've got their own gig. And then you have another subset of real-world asset tokens, which are not securities either. Art. Some people might even call some of their NFTs as RWAs. So again, there's other ways to dissect this, and there's probably more layers. But I'm trying to make this as simple as possible to understand. All right. Apologies for that typo. It's a bit formatting. We've been working on a million things. We're trying to run a couple of platforms and our coin, so this takes up a lot of time. Anyway, what's the target market for real-world asset equity tokens? And so just for that last slide, when I say RWA, I'll say RWA equity tokens now when I'm starting talking about real estate, and this is the real area. This is the big opportunity. It's just in these numbers that are hard to kind of imagine, all right? There's trillions of dollars of private equity and 20 trillion of real estate and all this kind of stuff, trade finance. And essentially, the best way to think about it is all of that exists today, but it's all on paper. So all of that's going to transfer across, maybe not all of it, but a lot of that's going to transfer across on-chain, which means there's already trillions of dollars of assets. You don't have to make them up. Like we're making up crypto, we're making up NFTs, we're making those markets. There's a market already exists. So there's trillions of dollars there. And I think we'll have a parallel universe for the next 20 years where everything issued on paper, a lot of it will stay on paper, but then a lot of things will have a hybrid, and then a lot of new things coming out now are just on chain, real world equity on chain. So it's the biggest opportunity. It's far bigger than cryptocurrencies, but connected. They help each other. We used to say years ago that real world assets will help crypto. Why? Because it gives a real use case. And crypto is great. You want to do meme coins and gamble and do all kinds of tokens. That's amazing. But this will add value, not take away. And I'll talk a little bit more about stablecoins and where that's going right now. And to validate my point, stablecoins, real world asset tokens, they've been instrumental to the growth and the cryptocurrency asset class as a whole. So that's the size. Now, this is more of the real 2.0, 3.0 RWA. So a lot of people start off, they tokenize debt or tokenize equity. It's 1 for 1. Okay, that's good. But then when you start to think about it and you start to analyze, what could we do now? We're going to start to, for instance, break down all different types of assets into multiple different types of real world assets, right? Financial rights, ownership rights, utilization rights, buildings where you're just selling the advertising revenue from that building, big billboard on the top, but you can invest in that. You don't have to buy the building, you might buy one floor. That's just some simple examples, but that's going to be wild because we have programmable smart contracts. So we have programmable debt and equity. And it's just going to dramatically, it's going to get a lot more sophisticated, but there's going to be a lot more products. So the size of the industry is just going to grow exponentially. Right? And we're still very early on, right? You think about Bitcoin 2008, Bitcoin, yay, we're going Wall Street. It's 2024. So it's taken 16 years. This won't take as long because it's already underway and we already have existing markets. But 6 years in, we're still a young industry. But now, the real, all the big players are really starting to get it, as well as the regulators. So stable coins, let's talk about them. They're really, really important. A lot of people think stable coins are the RWA real world asset tokens that have already long time ago showed product market fit. I think that's right. Stable coins, mostly dollar for dollar. I think, again, this was highlighting how important they are to the ecosystem. There's a lot of new stable coins coming out, different types of currencies. And I think probably the most interesting and valuable, news around this is that if I could sum it up, one of the most important, moments or things that have happened this year is that essentially, to summarize, most of the US government realized that supporting stablecoin infrastructure and products, or at least not blocking it, would actually increase US dollar dominance around the world, which I think was one of the major reasons, I'm going to talk very high level, that there's been so much pushback to crypto in America in general, right? So now you've got a government that wants this to grow. And you think about it, like, how do most people coming into the space buy anything? They get $1 from their bank, they get a stable coin, and they go to an exchange and they buy a Bitcoin, right? That's it. So more stable coins, more capital, much bigger industry, right? So stable coins are a key component, and probably the OGs, first real world asset tokens that went anywhere. A little bit of shout out to Gabe Abed. He's one of our investor advisors, good friend of mine. He's now chairman of Binance. He was the very first stablecoin out of Barbados, and set up a company to actually advise on that, helping governments do stablecoins, etc., CBDCs. But over that time, I think they've grown rapidly. I'm looking right now at a chart here. Tether USDT, which I'm sure everyone's heard of, $129 billion market cap. I'm sure that'll double, triple this cycle. What are they for? They're for buying and selling other cryptocurrencies, with many assets are priced in USDT and USDC. They're used in decentralized finance as collateral, in lending platforms, payments, remittances, store of value, tons of use cases, right? And they also make a lot of money, right? So not for you if you hold them. If you hold a USDT, you make nothing, which is why now there's a lot of development, and has been for a while, platforms that allow you to take the USDC somewhere and earn interest we'll leave it there for now. But Tether and USDC have had some of the most incredible business models in the world, where they take your dollar, they give you a digital dollar, they take that dollar and they invest it in treasuries and whatnot, make 5%, and then when you want your dollar back, they give you your dollar back, and they keep the 5%. Billions and billions of dollars of profit. And I don't know, I think ironically, I don't even know what the word is for it, but they were issued originally with no interest, because then they wouldn't be called securities, but then they were used in crypto. So it was such an important part of the infrastructure, and then they didn't need to buy it, and it was probably more dangerous and very difficult to start putting interest on these tokens if they're all paired against. It's a complete mind headache. So they almost couldn't pay interest, even if they wanted to. But anyway, there's lots and lots of new platforms coming out, and also some new use cases for RWA, which we're working on. Stake an RWA token and use it as collateral to borrow other types of tokens. This is going to be enormous. I'll break that down a little bit further in terms of the use cases, right, outside of what most people might be thinking. All right. So I just broke that into one or two in case this gets too long for everyone, and team can split it up. But anyway, let's keep kicking on. So here we want to talk about traditional finance. Some people in crypto call it TradFi instead of TradFi. Anyway, I like that term. So TradFi it is in our company. The process to issue real-world asset equity tokens, the stages, licensing, and models. Right. So first of all, it's hard to get this in scale. The long story short is that the cryptocurrency market, although it's growing rapidly, is just a drop in the ocean versus the size of the real-world asset markets, whether they're private markets, whether they're gold, whether they're capital, like public markets, private markets, whether it's real estate. So tokenizing that real-world asset space is going to bring, trillions of dollars of tokenized assets to the space, right? Which again brings more use case of coins. You start thinking about this like, well, if there's $1 of real estate and it's got one USDT against it, what happens when there's trillions of dollars of real estate? It's going to need trillions of dollars of USDT and then all the other different use cases, right? So I borrow this from Michael Saylor, who's an absolute legend, MicroStrategy CEO, first person on Wall Street to show everyone what you should be doing with your treasury, which we've done as well, which is put some of it in Bitcoin. He's taking it to a whole new level. And we'll put his recent presentation in the post. Every single person should watch that. If you don't want to buy Bitcoin after watching that, then you cannot be helped. But a beautiful analysis of the history of money and the history of humans and the history of value creation, destruction, transferability connected to the rest of the assets we have. Right? Money is just a concept, really. So here is just for everyone's, I guess, trying to conceptualize this, right? On the top left is gold. So you can see Bitcoin, you can hardly see it, right? Right up in the top left. I missed it for a second. So we are a long way to go. But if you think about all that stuff on the right getting tokenized, it's like, I guess they're now saying it's 900 times. Oh, well, that would be 600-700 times. That's coming into the space, right? So it's really hard to get your head around how big this is. And they all come together, right? They all come on chain and they all help each other grow, and they all come together with new use cases. It's going to be magic. And this is a bit more of a hard chill on Bitcoin and where they think Bitcoin's going to go in relation to other assets. We love Bitcoin. They kicked it all off for us. That's really interesting. And so let's get down to, so if we think about real-world asset tokens, I've got a share of a company, my startup, real world, I've got something real world. How do I do it, right? So the short version is you've got to, hire a company like us to help you structure it up. And that includes legal advice, that includes tax advice. You're issuing a security, right? You're issuing a security, which essentially around the world, everyone has regulations, securities regulations in different shapes and colors, but they have them. So you have to abide by those regulations. And by the way, none of those regulations reference paper. So you can issue an RWA, token anywhere in the world, in my opinion. as long as you follow the regulations, because regulations don't reference paper. And that's been a position that I think the Singapore government's had since day one. And more governments around the world are starting to take this approach. I'll get into the regulations a bit later, but you got to get the legal structure set up. You're selling part of your company or shares, and you're going to manage it. Right? So then you need to work out also where you're going to launch this, who's going to issue your tokens, what smart contract standard are you going to use, what protocol are you going to use. Do you have a custodian for third-party custody? Do you have anywhere to trade? What can people do with this? Do you have any partner platforms that can do lending and borrowing, collateralization, et cetera, et cetera? And then you have to manage it through the life cycle. So again, this is why the industries had a difficult birth, because a lot of that was all piecemeal and not speaking to each other. And that's at least one thing we've done with ourselves and our partners, is to make everything easier, much easier. Make it a one-stop shop. Push a button, everything works. That's the goal. So that's the process. Now, stages of which how this kind of operates a little bit more granular. You know, there's an investment contract here, right? Whether it's just a smart contract or it's a paper contract plus a smart contract, you are connecting. You know, investors need to know what they're getting, right? I'm putting in USDT, USDC. I could be paying in Bitcoin, and I'm getting back a real asset token, right? And I need to be comfortable as an investor that this is, you know, the next generation of me buying a paper share of a company, but it's better, right? And then the guys issuing it, fund manager, asset manager, company owner, they also have to make sure they know who's buying these assets. So at least a basic KYC. You don't want anyone sitting as an equity shareholder of your company who you don't know who they are. It's very dangerous. They might destroy your business. That's a big difference between ICOs and real-world asset tokens. ICOs don't care who owns them typically. But it's very different with equity RWA. So both sides want some basic structure to this. And that's the DNA of our business and our thinking, was implement this whole new technology, try to make it as easy and fast as and light to use as crypto, but you got to still have some rails around securities and regulations, or you're going to get jacked, which no one wants to do. And anyway, this is a different type of asset than crypto, right? Even though they're in the same kind of bucket. So you also need to make sure that if you're a fund manager for real estate, you have a license from somewhere that allows you to manage a real estate fund. And if I'm a platform, I need to check that that's true, right? Some people do need licenses, some people don't. Debt equity is different, et cetera, et cetera. There's just some basics. Mention this, token standards, where you're launching, how you're doing that. You're still, and all the investment metrics, like your 10% return, 12% return, all of that needs to be determined. And then we obviously have onboarding, KYC, AML. This used to be a big pain point for people in crypto, like real-world asset tokens are stupid, you got to do a KYC. I mean, if anyone's tried Binance or Coinbase these days, our KYCs are now equal or lighter than those guys, right? So they were all unlicensed before, not Coinbase, but a lot of them were. Most of the cryptocurrency exchanges were never licensed back in the day. That's why you could just plug in a wallet. But everyone's had to grow up. Regulators come for the whole space. It is what it is. We support just investor protection. Regulations could always be less, but you know, I'm not here to spend my life arguing that. I just want to build stuff that works for everyone and actually is legal, right? Protects everyone. So that's the next stage. You've got custody. Do you have custody? Can people self-custody, or can they use a third-party custodian which has a license to custody real-world asset tokens? And that is part of the whole journey of this industry. Was back in 2018, there was not one single person, because it never happened before. So you had to build all these things. You had to build the first custodian. You had to build the first exchange. You had to build the first AMM DEX for the RWA. Everything was the first, right? And then you have secondary trading, right? So how does that work? Do you have market makers? Do you have a venue for this? Like, you know, how's it going to work, right? And how are you going to manage that? And then you have, you know, the management of the asset itself, right? The shares are essentially RWA tokens are essentially digital shares, right? If I get a digital share of that real estate fund or that real estate manager, he's still going to go build the building and manage the building. It doesn't change anything. His job remains the same. This is just the new infrastructure for issuing and trading all these assets. It's the new system we're going to use. So people sometimes have a bit of a misconception about that. About, you know, what does tokenization do, like, versus like what's their normal job as a real estate manager. So that's another one. This is annoying because we fixed this and for some reason it's gone off again. Anyway, what's the conclusion? You need to do this legally, right? Many people have already gone to jail and been fined for not just following simple rules, not finding platforms that have licenses and tech, and just being a bit more mature and grown up about it, right? So you need to find the right people. You need to structure these things properly. You need to make sure you're working with legitimate players that have licenses if they're necessary. And, you need to, distribute these in places where there's legitimate investors, right? And that's kind of the nuts and bolts. Okay, moving on. The models, all right? The RWA token models, all right? Well, first, because there's a lot of, let me put it this way. This was the very first model, right? 2018, we're going to do token issuance only. We'll issue your RWA for you. Give me a lot of money, and then that's it, right? This model was solved one of like 10 things that are needed. If you don't have licenses, you can't raise money. If you don't have license, you can't trade. If you don't have license, you can't put custody. You can't do everything. Real-world asset equity tokens are securities, and securities, by their nature, how they're handled, who can buy them, etc., these are all regulated licenses. So token issuance alone doesn't solve everyone's problem, but some people have gone out there. Tokeny, there's a bunch of good guys that run that. But again, you're issuing this token to where, right? Nowhere. So that was the first model. Most of those businesses died because people wanted all the other things that you need. But had to start somewhere, right? So the second model was STO, Real-World Asset Exchange. So there are a couple of people that set these exchanges up. Problem was, some of them did their own private chains. Nobody cares. Other people had strange protocols or had whatever. It might have even just had Ethereum, but there were no market makers. They didn't help on the issuance. The primary issuance is like when the assets first launches and it gets funded. Because when you think about stocks on NASDAQ, they were funded for many years with money, VCs, private sales, Series A, B, C, D. And then they go launch publicly and they get digital and they start publicly trading. But they don't launch here, right? So a lot of people were like, a lot of these exchanges were like, oh, we're just going to wait for these RWA assets to fall out of the sky, fully funded, perfectly structured on the right protocols. It was never going to happen. Failed. Right? But, well, I should say this. The early ones failed. They're very key infrastructure. Maybe it was a bit too early back in the day, but it needs to be connected to primary issuance and custodians and market makers and all this other stuff to make it really sort of come together, right? We keep putting our companies on there because we can do all of these things. But anyway, real-world asset exchange only had its issues, and there was no market makers, which is why we built IXS. The third one, which what we consider we have, is licensed tokenization software as a service model. So if you look on the right here, it basically says, if you build it yourself as an investment firm, it's a big problem, right? Because you're basically tokenizing your own assets to yourselves. Not that interesting. You typically don't have broker dealer license, fund licenses, market makers, etc. So it's good for an experiment, but it's not scalable or exciting. If you hire a token issuance company, you basically use their technology to issue your real asset tokens to who? To yourself. Again, or maybe your own investors. No trading venues, no AMMs, no custody solutions, nothing. So again, good for a proof of concept, not scalable or what's really needed with securities, fundraising and selling and trading. Then you had list on an exchange. Again, it was good for secondary trading if you're already funded and if you have market makers. That's two big ifs. And then what we brought out, at least on the InvestaX side, which IXS has now has the same model available. We allow people to co-brand a section of the platform so it looks and feels like them. They can tokenize whatever they want. There's KYC, there's wallets. People can buy in stablecoins or fiat. They can get issued real-world asset tokens, their own wallets or third-party custody, the secondary trading, etc. And you can start liquidity pools. So, and this is a monthly subscription fee. The other models also had lots of different fees. So they were very prohibitive for the industry. And, it would be, I wouldn't want to waste this opportunity to get law firms and consultancies that have been massively overpricing consultancy for RWA services for the last 5 years, not even speaking to platforms where the clients really need to go. So that was one of the other issues way back. Everyone was getting charged way too much money to not even get any, just to be told what to do by people that can't even do it. It's a bit crazy. Anyway, that's the evolution of the new industry, and we now offer advisory services to help everyone go from A to Z before you launch, and then you can come and launch as well. So this has been the evolution of the models. The fourth one, which I should put up here, because I think that I don't even have a slide on this, but I'll talk about it a bit later. It's important for this group. So a lot of people think that RWA protocols are the answer, are the main players in the space. Right? Unfortunately, that couldn't be further from the truth. In the concept of blockchains, were public blockchains, were anyone can come and build, right? Don't need permission, build a dApp, away you go. And that's great. Still remains the same in all these blockchains. With real-world asset tokens, equity tokens, very different. Yes, I can go and build on a public protocol today. I can issue my own equity token, but who am I issuing it to? No one, myself. No one even knows I did it. Right? So there's all these protocols now, and we're integrating with so many of them. They want to be real big. They want to be big players, dominant players, having real-world asset tokens on their protocols. But unless they plug in to broker-dealers, exchanges, custodians, AMMs like us and other players, they're not going to get anywhere, because everyone issuing these real-world asset tokens want all these services that are licensed services as well. So that's the short story. But and you're seeing some major growth with groups like Mantra, and there's other RWA protocols, Plume's coming up with big market caps, but no assets there yet. But again, like, I implore all those guys to, if they're really serious about adding value to the space, to go and plug into groups like us. Otherwise, it won't be there. Because what's the example? Big real estate group puts $1 or billions of dollars of real estate on a protocol. Well, for what reason? To trade, lend, borrow. Okay, well, on the protocol alone, it can't do that. So they might convince people to do that for the firm 5 minutes later to go. That'd be a waste of time. Right? That'll come out in the wash this cycle, but there's a lot of confusion right now. Whatever, we're pro innovation, we're pro tech, we're pro blockchain, we're pro everybody, but we're not pro people telling the market things that aren't true, and either blatant lies or just logically and realistically don't make any sense. Right? But anyway, we welcome any public protocols to come and integrate with us. That's our proposition. We're first in market in Asia to go protocol agnostic, but public chain facing. So we have BNB, XDC, BNB is coming today or tomorrow, maybe next week. I might have got that out too early. XDC, Base, Coinbase is an investor, Kaya Chain, big in Southeast Asia. We used to have Algorand, Tezos, Hedera. We've got Bitcoin coming. It's exploding. And hopefully Sony from the Sony protocol as well. Anyway, moving on. So what does this kind of mean? The models, right? We're talking about the models. Again, apologize for any formatting issues, but again, each one of these slides I could really go a lot deeper in. But the point is this: what do you know so far? You know about IDO platforms. Oh, buy crypto, right? ICO. Okay, great. That's all they do. No secondary trading, no securities, no RWA. Fine. Then you have DEXs, Uniswap, PancakeSwap. I think we all know what they do. Secondary trading venues for cryptocurrency, decentralized exchanges for cryptocurrency, not real-world asset tokens, right? Yes, you can do real-world asset utility tokens there because they're cryptocurrencies. But you can't trade real-world asset tokens on Uniswap or PancakeSwap or SushiSwap or all the swaps. Then you have RWA products, like token products, right? Ondo Finance, best one, tokenized treasuries. It's a product, right? You invest 100,000 USDC, 100 USDC. No, actually, the minimums are high, whatever it is. You get a tokenized treasury that's earning 5% interest, right? That's a real asset token here, but that's just a product, right? It's not a marketplace. It's not a venue for trading. There's no secondary trading. It's really just one product. And then you have our platforms, right? You can do primary issuance. You can do secondary trading. You can do liquidity pools. And we could do crypto, but we've got licenses for it, but we're not focused on that. But also, you can do any real asset token, right? And that's what we've been building for 6 years, right, to get us to this point, to provide these services for the world. And that's why we think, we spend a lot of time trying to educate community, grow the business and the community and the education, because there's a lot of people out there saying real asset tokens. You can't actually buy them, guys. If you're a retail investor, you can't actually get to the actual real asset tokens, I should call them, because I'm not going to pick on them, but like BlackRock's RWA equity treasury token is $1 million and $5 million investment per investor. We do 1 USDT for anyone who wants to buy with a photo ID. It's all legal, it's compliant. We built our platforms for the whole world, not just for the rich people. So a lot of these people pumping real world asset protocols and platforms, they're not even available for the crypto community. This is a message that will come out this cycle, hopefully a bit stronger, and that will drive a lot more users to our platform and a lot more assets. Because essentially, a super majority of asset owners want more investors, and a lot of people want to target retail investors. Again, you guys aren't welcome at most. There's hardly any platforms in the world, I think, have retail licenses like we've been able to obtain. All right, coming up to an hour. More coffee. Let's keep going because I want to just do this in one go. There's so much work to do. Number 3. All right. This is cool. We've outlined, I shouldn't say I should say we, our team's outlined the 5 real exponential values of tokenizing real world assets that go far beyond just fundraising. Right? What's liquidity do? Impacting real world asset returns, the returns of real world asset tokens. I'll give you a little case study on IXSwap. I think it's the killer app for the RWA industry, and it's so exciting and so interesting what it can do. Regulatory framework around the world, custody options, etc. Let's get on. So here's the 5. Number 1 is 101 blockchain. Tokenizing on a blockchain, a token's better than a piece of paper. Transparent, digital, mutable. Okay, cool. Number 2. So let's just say number 1 for us was a given. It's now taken the rest of the world to come to that conclusion, but we just thought every single share would be tokenized because it's a better, cheaper, faster system, and every government would want it, every company would want it. So here we are. Thanks for coming, everyone. Number 2 is much more exciting. So what if you could we'll use VC fund shares, right? Because typically a VC fund takes 12 to 17 years to exit if you put money in. They never tell you that. We got a couple of good VCs. Most VCs have no idea what they're doing, but who wants to invest for 17 years? Not really anyone, right? The point is it's completely illiquid typically, right? There are secondaries markets, but let's not get picky. So if I've got a VC tokenized share of a VC fund, RWA equity VC token on IXSwap, you can come and create a liquidity pool. So with $10,000, that's 5,000 equity tokens, 5,000 USDT or C or whatever. You can start a liquidity pool. And we just did that with the CKGP token as a tokenized, basically a tokenized fund vehicle to invest into all different types of assets. It's managed by a professional crypto trader, and people could buy with 1 USDT, and we started a liquidity pool a week later. This is 100 times better than waiting for 17 years, right? I'm giving extreme examples, but actually it's factual. So the power of DeFi, the power of AMM, and that's all just beginning, right? We're on V2 for IXSwap now, and no one else even has a V1, but like it's just going to explode. Now, the third one is lending, borrowing, staking real world asset VC tokens. That's never been possible for you. What if you could take $500 of your VC token, put it in a platform like ours, and borrow $200 of USDC, and then go off and use it, right? Incredible. Borrowing, lending, borrowing, staking of RWA is going to be much bigger. These are my opinions, than the trading volume of RWA. And that's what Wall Street's doing. Wall Street is literally, I'm going to, again, trying to keep it simple and trying to keep it not to 10,000 hours here. A lot of the Wall Street guys are tokenizing financial instruments and public trading instruments to make them more usable, and a lot of them so they can be used in collateral for lending and borrowing, which they can't do in their current form, even if they're publicly listed. That's my statement. But it's a huge use case. We're going to be one of the first people doing this. I'm really excited by this. I think it's just massive. Next. I mean, again, if you think about it, like a lot of use cases in the public markets for people and is borrowing, leveraging your assets, right? But in a lot of the private markets, you can't leverage because no one knows what they are, who they are, what they're worth, where it is. If you come in this tokenized format, you bring all of those good, strong clear, transparent characteristics of publicly traded assets. So then people would lend and people would borrow, right? And in crypto, we really only had lend a Bitcoin, borrow an Ethereum, or borrow more Bitcoin, or whatever. Like, it's been crypto to crypto. So we're now sort of bringing in the big boy assets, bringing in the RWA, and they're going to dramatically change the whole lending borrowing marketplace. It's going to be amazing. Number 4, back to the ETF, right? New investment structure, new technology, marrying marketplace, boom, explosion of value. That's what we're doing now. We got VC 2.0, which I just talked about. Like, we've created a venture fund that funds quickly, that's tokenized, that investors can trade immediately and not wait 15 years. Incredible. Same for real estate. A lot of real estate funds are 8-10 years, fixed life cycle. If the market tanks, they're forced to sell, everyone loses money. Tokenized vehicle, which people can trade and not sell, would be dramatically better. Tokenizing our ESOPs, allowing our team to trade their ESOPs makes them more valuable than having paper ESOPs in a startup that you can't do anything with. So typically, ESOP is an employee stock option pool. It's a share of a company that the team get, right? So in a startup, normally it's binary. Cross your fingers, hope this startup sells, because you either sell or you don't sell, right? If you don't sell, then nothing, right? If you sell, you get paid. So we've changed the whole thing around. So, well, our ESOPs are meant to be used to get people to work for your startup, right? So you can go work at a bank. Don't recommend that. And I've got friends at banks, but I don't recommend it. Go work at a bank, big salary. Go work at a startup, don't get a big salary. You get a smaller salary plus shares, right? The shares are meant to go up because you believe in the business, you're getting ownership. But again, it's a binary event whether you actualize that value. So then we went, all right, why don't we tokenize those ESOPs so people could buy and sell them? That's a lot better and more valuable than sitting around waiting. So that's another use case, right? So smart programmable debt and equity marrying with the entire trillions of dollars of real-world assets is going to have this explosion of new types of investment products. And again, as I said before, like, smart contracts and blockchain has proven in the non-real world asset space, so crypto, memes, DAOs, whatever, NFTs, we're constantly creating new products, better products, I hope. There's a lot of stupid stuff, but better products, better use cases, more sophistication. So now we're rolling into sort of, I'm going to call this real world asset 2.0, 3.0. We're now going to, every day there's more sophisticated products going on, but, you're going to be able to invest into, like, diversified pools of different things. You're going to be able to use your real world asset tokens to buy different things, to loan on them, to create some, earn some market making fees by providing liquidity at AMMs. And I'm sure that if I do this in a couple of years, there'll be like another 5 that are all new. And that's the exciting space. Space is going at lightning speed. It's crazy, but I just know that there'll be 5 new things, because when we started in 2018, none of the 2, 3, 4, 5 existed. That's actually a fact. Now I say it out loud. I just knew something massive was brewing here. And then over time, in the last 6 years, we've added these use cases, and we'll continue to do that. So let's kick on. Digital versus paper. I actually will give these slides out to everyone. I've talked through these just one by one. But yeah, again, this is transformation. Adding multiple use case for a particular asset obviously dramatically increases its value. And the last one, which I think is probably they're all super exciting, but anyway, whatever. I think as a business in this space, I think this is the most exciting. We always knew that the Coinbase and Binance would want to sell more assets. There'll be enough crazy crypto, and we love crypto. They'll just want to add more assets, right? And then occasionally, especially in bear markets, people don't want to buy crypto. They want to get 5% return, something safe. So all these guys are now coming towards it. All these guys, Coinbase, Crypto.com, there's a ton of those. It just makes sense. We're going to live in a world of platforms, and we're going to live in a world of more platforms and phones. And why would I not want to open up my phone and have all my assets tokenized? I mean, I almost do it now. Like, your stock account, Interactive Brokers, could be tokens or not, but it's digitized. I don't see any paper. And then your crypto exchange and your crypto wallets are the same thing. So this is it. This is, and you're now seeing things like Coinbase building a real asset exchange in Abu Dhabi, Liquidity tokens, Crypto.com buying broker-dealer to launch RWA tokens in America. A couple of the exchanges, Bitfinex, Crypto, Binance, FTX, launching tokenized stocks a couple of years ago, pulling them down. They'll come again. This time we'll do it with licensed partners. Do it right. Tether's launching a tokenization platform. They'll start to look at real-world assets and plug it in. Robinhood is buying Bitstamp Exchange. So the stock platforms are now buying the crypto. Same thing. DBS Bank in Singapore launched a cryptocurrency exchange. So you're now seeing on a daily basis, like the TradFi guys coming to add digital assets crypto, and the crypto guys coming to add RWA. That's the magic. DeFi wallets, we're plugging in as partnering up with some of the best crypto exchanges and DeFi wallets to power their back end of RWA. So their users can buy and sell RWA, but it's got to be done legally, right? And they don't have the licenses. So through B2B and tech integrations, it's all being done through our business, but from a user experience, they just get to see more assets, and the exchange gets to sell more assets, and everything's real. It's all on chain, and they make more money, and the industry grows. So, amen to this year and everything kind of really turning around, and now America going full tilt for wanting, instead of killing the industry, the whole industry, digital assets, they want to own it. Which is made, so these new distribution channels are the key, because essentially banks, and I'm not going to name anyone in particular, they're closed walled gardens. They don't want to give their investors to leave their system. They want to keep them and charge as much stuff as possible. So, I think my personal prediction is, if I was a bank, I'd be really worried. It's going to take a long time. I'd be really worried about the crypto guys, right? They're going to have the hundreds and then billions of users, and then they'll add all these banking services. That's actually on the roadmap of Crypto.com. We want to become a digital bank, start a crypto exchange, add stocks, real-world asset tokens, treasury tokens, that's all. Real-world asset tokens are a huge part of this journey. And then bang, then you got everything, right? And you grow from there. So, or they started on chain. They started technology, whereas Web 2 banks, etc., they're all in old technology, so they're going to rebuild. Super painful, super hard. Anyway, that's a different debate. So this is really interesting. When we decided to build IXSwap, it's because we're actually building to solve a problem of our own. We're building an exchange. There was no liquidity in the world. Everyone's talking about it, and no one's providing any solutions. So let's go build an AMM and a DEX where people can start their own liquidity pools and get licenses and whatnot. But what's really interesting is that, this is the debate again. Every single one of these slides could probably go on for hours. The long story short is that essentially what typically is shown in all different types of assets is, if you have a higher liquidity, you can buy and sell really easily, the returns are lower, right? And that's what you're seeing on this chart here, right? Fixed income products, bonds, and financial instruments. Whereas things that are typically illiquid, which also means you hold for so much longer, might have stronger returns. I've had a lot of people tell me that the reason people invest into illiquid structures is because they don't want the volatility of public markets for keeping their books updated and the value of their assets. There's some truth to that. But again, my response is always the same. Do you think people who invest in venture capital funds because they want to wait 17 years? No. They want to invest in the asset class. What if they could invest in a venture capital fund, but they could sell it tomorrow if they wanted? Yes, that's the RWA version, right? So, you got to be careful. Everyone's shilling their own books. A lot of people in the RWA industry, in the TradFi side, don't really want this to happen because it removes the need for them to exist. A lot of the jobs and the middlemen, the whole of Wall Street's filled with middlemen, and blockchain removes the need for most of them. So there's that. Which is just human protection, I guess. Don't want to implement something that means next week I don't have a job, but that's happening. And then a lot of the guys coming into space now, RWA Protocols, a lot of them are doing ICO grabs. They're just doing a money grab. They're years away from getting any licenses. Yes, they need them, most of them. And you'll never know if it goes anywhere, and there's just tons of people riding the RWA narrative, which has only really started this year. We used to be called security tokens last year, and now we're RWA, and now everyone's getting involved in RWA crypto utility tokens are the second best performing crypto tokens this year. Okay, great, awesome. We've got one ourselves, IXS. But I'm just saying that you got to be careful out there because most of these projects are going to fail. We've done a lot of the groundwork and are actually in real business and have real clients and have an amazing community. So thanks again to the community. If you've made it this far, we got the most awesome community, and to the mods and the team. It's been extremely difficult to start up in this industry and crazy difficult, but we're here, we're standing strong, and we're excited to keep going. So, okay, this is just a snapshot of what's the difference between IXSwap and Uniswap. I'll summarize it. Uniswap, right? Platform, smart contract, send you to crypto, start a liquidity pool. Anyone can join, plugging in a wallet. You can buy or you can join the liquidity pool. Amazing, beautiful, love Uniswap, one of the best inventions in the history of mankind. IXSwap looks and feels the same, except when you put your RWA token in, it's got to be custodized by a licensed custodian. And then when someone comes to buy and sell the RWA equity token, it's got to pass through a broker-dealer license. That's what this image is. That's what we built. That's 3 years of development in a nutshell. That's the magic of the platform, right? And now, only up until recently, it was available for accredited investors only, because we originally started by renting InvestaX's license. Then we went and got all our own licenses. So now everyone can join. Photo ID, 1 USDT minimum, buy an actual real-world asset token, not a crypto. And we're just getting started. We're the first 6-7 liquidity pools in the history of the world. So we need to keep working away and bring more clients, bring more assets, bring more liquidity providers, bring more users. So super, super excited. First version was on Ethereum and Polygon. Now we're on Base, right? V2's on Base, 100 new features and functions. Coinbase is one of our investors. They want 150 million wallets at Coinbase to buy assets on their infrastructure. Base is a bit of a no-brainer, but we remain chain agnostic, and we're looking at bringing in new protocols as well. BNB, obvious reasons. BTC, talk about that another day. Anyone else that's serious about investing to get their protocol, make their protocols useful in the RWA space by integrating with groups like ourselves. Okay, 50 out of 90. We're over halfway. Jeez. What's this say? Before there was this AMM model in the decentralized exchange, well, there was no liquidity. It was a listing board. When they implemented this automated market maker, the AMM model is what they call it, zero to hero. This is obviously outdated, but this was just to show the original. Now there's trillions of dollars being traded on DEXs. That didn't happen. And essentially what we consider for the IXSwap model is that a very, very small subset of real-world asset tokens belong in an exchange. And when I mean an exchange, I mean like a tokenized version of New York Stock Exchange. Because a centralized RWA exchange, it's got a lot of cost, it's got a lot of licenses, got a lot of compliance. It also needs market makers, right? Traditional market makers, order book, matching engine, companies sit there. Therefore, they only typically want to do the biggest, the best, the most liquid assets. Okay, that's fine. What happens to 99.99% of RWA tokens that aren't in that bucket, which is most of them, right? Your startup token, my real estate token, his VC fund, and millions and millions and millions of others. They're not going to get a bid in a centralized exchange. So we built so they come to us super fast, super low cost, start their first liquidity pool, and build from there. Tell all their investors, hey, I've now got liquidity. You can join the liquidity pool. It's magic. So yeah, anyway, that's how big it is. And what we found is that the history of this is that because it was built to look and feel like a crypto DEX, even though it handles actual real-world asset tokens, tokens move in the same manner because people are buying and selling them. There's liquidity now. So instead of having a discount for a secondary trade, which a lot of people think, oh, it's a new private asset, liquid asset. If you want to do a secondary trade, you need a big discount. That's how it works in the paper world. We're finding the opposite. If you want to buy and sell this now, you got to pay more and the prices are going up. So this is wonderful. It's a short history for the platform. It's only a couple of years, but it's completely turned the concept that selling a private asset requires a huge discount on its head. It's completely turned on its head, and it's live and it's real and it's on chain. So anyone who wants to argue that can go ahead, but it doesn't make any sense. Like, here it is. Really amazing stuff. That's a whole thing in itself. So regulation. Chat on that. Should brought Alice or some of the legal team in to do this one. So the short summary of this, the TLDR regulation. There are different types of RWA tokens. The ones that are equities and securities need to be issued, traded, and custodized with licensed venues. Right? There are a subset of RWA tokens that don't need that. Tokenizing a whiskey barrel, I guess that's commodities, and depends where you launch. It also depends where you launch, who can buy, who is buying. Right? So where you launch, right? Even though this is all on chain, someone's launching this real-world asset token. In our instance, let's just talk about IXSwap. In our instance, we're launching it out of the Bahamas. So we have a license out of Bahamas to issue and trade any real-world asset token from anywhere in the world for anyone who wants to buy it. But they must onboard with us through our process. We must approve them. And then the investors must pass KYC. Couldn't be any simpler. Everyone should do it if you haven't done it, and go and buy your first real-world asset token on IXSwap. Get started, not just sit here talking about it. But that's our license, right? It took 3.5 years to get. So the asset could be a real asset equity token of a startup from America. It could be a startup shares from South Africa. It could be a real estate token from Hong Kong. It could be whatever. That's the rails, right? So the point of the regulation is that there's typically you're typically operating under the regulation of at least one country, right? Because that's where someone has gone and got the license. Now, people have said, you can issue real asset tokens on chain, decentralized to everybody. Okay, it might be true for some dollars like stablecoins, but again, they're not earning interest and yield, so they're not like equity tokens that are making money. But when it comes to like equity tokens, again, the company who's issuing the RWA tokens. So if I'm a venture capital fund and I'm issuing these tokens, I have my company set up in a jurisdiction, in a country, and there's rules, right? I have to say, I set this company up, I pay money, I have to tell how much money it makes, I have to give audit statements, I have to pay tax, I have to tell them who owns shares. So again, this is just how the world works, right? So all these real-world asset tokens that, and again, most of them now, like I'm going to just focus on real-world asset equity tokens, they all come from a certain country managed by some body, and those buying and selling must be known people, right? So this is the concept of the regulation, right? And again, the platforms, especially our team and others, like we're here to abide by the regulation, but to try to make the most ultimate user experience possible, and also get as many assets and as many people involved and as many people accessing these assets as possible. But these are the basic frameworks for it. So with that in mind, you also have different regulations in different countries. Right? That's how it works, and that's been a bit of a crazy episode, right? So for the RWA space, some regulators were very smart. I'm going to give Singapore a nod on the head for this one. Like, is it a real world? Is it a security? Yeah, it's a security. Okay, well then follow licensing, get a broker dealer, get an exchange, get a custodian. This is my take. Regulations don't reference paper, so it's how you buy, who issues, where you can buy, what's the process, right? It doesn't say you must issue this security on paper, and that's the only reason it's a security. So if you issue it on a token, you can. You just got to follow those same rules around how you do that. So that's been a mad confusion for the world, because it's not cryptocurrency, right? But we use protocols. That's a big confusion. That's why the regulators. And cryptocurrency came out, and that was definitely something new, right? That was a new thing, just say, right? And then a lot of people, hate it or like it. Most governments went, okay, we need to come up with some kind of framework for this, right? And it was mired in controversy and still goes on forever. It was only 2 weeks ago that America went from trying to kill the industry to now saying, let's support it. One example. But real-world asset tokens exist within the securities regulations that already exist in the world. Now, some countries don't see it like that. They're trying to make real-world asset regulations. I think Korea is probably someone I can think of that's doing that. but other countries are not, right? So again, part of the difficult birth and the journey of what we're saying here, taking you through the whole real-world asset industry, was there was mad confusion, and it confused everybody, but there shouldn't have been. Right? We don't need new rules for real-world asset tokens. We have existing securities laws. Yes, they should be updated and it should get better, but we don't need it. So that's how it is, right? And again, there's changes coming, right? Because again, you now have this new world of issuing real asset equity tokens purely on chain, right? So I said that before. You've got some of it's like, here's a paper share of a company, I'm tokenizing, it's 1-for-1, still real asset token. Now, evolutionary in parallel, depends where you are in the world, we do this as well. You can now issue a real asset equity token without the piece of paper altogether. Right? The blockchain is a source of truth. This is where some tweaks to regulation might be required, and that's happening around the world, like Switzerland, Germany, Delaware, Wyoming. Actually, in America, even though there's been a lot of fun and a lot of craziness, there've been kind of a bunch of positive developments on the RWA space way before last week, right? Over the last couple of years. But if what you want to understand at a high level, everyone's getting on board. And if I just think about, I mean, everyone knows now America's on board, but Singapore's been on board for 10 years. Hong Kong recently, Japan a couple years ago, Korea, Vietnam just announced, Indonesia, like at least in Asia, which is a big focus for us. Everyone's getting on the bandwagon, right? Because if you think about it from a regulator's perspective, the point was we need transparency to protect investors. That's why we have regulations. We never had regulations back before. It's just humans can't help themselves. They start cheating each other in Ponzi schemes and ripping each other off. You can see that in meme coin land every day. So regulations were built to protect, and then over time they usually get too big and grow into a super beast of its own. So anyway, the point is that that there's the regulators would want this. That's what we thought from day one. Why would they not want more transparency? Who really owns? Who really trades? Because on a piece of paper, there's always a delay. If you change a shareholding in a private company, it can take weeks before the cap table, the registry of owners gets changed. So there's actually a period where it's kind of wrong, right? If someone sold shares and the name hasn't been changed. In blockchain, real assets, that's just instantaneous. All right, so one example of benefits for regulators, i.e. why they would all eventually get on board here. So that's regulations. Dubai, UAE have been going really super hard at it. And if you're a founder out there, I'd say you got to be cautious. I'm not going to pinpoint anyone and say anything negative about anyone in particular, but governments and regulations is not one person. It's a lot of people. Even if governments come out and say, oh, we're super pro, we're going to do all these great things, you can go there and sign up and you can be stuck there for 5 years and everything changes and you never get a license, or it changes, or a new guy comes in and doesn't like it, whatever. So whenever someone's super pro early, you've got to be cautious. You don't want to invest too much energy and time into that, or you might burn yourselves. And there's a lot of jurisdictions now trying to get pro blockchain because they understand that blockchain companies, in brackets, can be anywhere. A lot of them are completely remote. So if you give them a positive regulatory framework, whatever they do, they'll set up in your company. They'll pay taxes. They'll hire people. They will buy drinks and throw parties in your town. Like, it's a good thing. So blockchain, digital asset industry, has created a much more competitive landscape for regulators, right, around the world to compete. You will still have a very kind of distinct difference between, American capital markets and, say, Cambodia, right? But they could both eventually be at a very kind of equal level when it comes to ease to do business, what you can do, can't do, and all this kind of stuff, right? So anyway, that's a bit more about the regulations. And again, it's why you need to work with professionals to get these things sorted in the first place. Is it equity? Is it debt? Is it real estate? Is it art? What type of RWA is it? Are you issuing it yourself? Hey, I'm a startup and I'm issuing my own real estate tokens to my own investors. You don't need any licenses for that. It's your company. You can sell it. But hey, I want to put it on that platform and tell the whole world about it. Oh, that guy needs a license. And where are they going to tell the world about it? Are they going to go on the ground running around in different countries? Because that means they actually legally need a license in all those countries. Or are they just going to promote it online, staying within the advertising rules and have people come to them? That's different again, right? So there's no one size fits all to this licensing thing. It needs to be asset specific. Who's issuing it? What type of asset? Where it's being issued and who can buy it, and what are the rules around that. I think that's the best way to put it. Just touching on custody, RWA, no different from crypto. You can either have self-custody, hot wallets, cold wallets. Don't use hot wallets. Every single one's compromised. That's what I see. Been here long enough. Cold wallets, cold storage, offline. Exchanges, you can leave your RWA on exchanges. We all know the challenges with that. FTX blow up and stuff. And then third-party custodians, licensed people who have licenses to do the service. The one thing I would add here that's very different is RWA equity tokens and crypto are very different, right? Because at this point in time, I try to keep it simple. If I have a company and I tokenize 10 shares, I issue them on IXSwap. I know 10 people bought them. Someone comes into IXSwap. Let's pray this never happens. Steals one RWA equity token. Right? Where are they going to cash in? Well, they can either go back to the company or they can come to IXSwap. And maybe there's other platforms. They've got to go to a platform or a company that the project's associated with, or no one knows who the hell they are. Now, we're going to know immediately that someone stole that. And we're going to know when this person comes and says, knock, knock, platform, I want to sell this. They've basically got a KYC and tell us who they are and then say, I'm going to sell this platform. They're going to tell us who they are as thieves. No one's going to do that. So, and again, because we're in this parallel universe, still early days, there's often a piece of paper that's being updated weekly, monthly, whenever, about who are the real shareholders. So if this guy turns up and he wants to cash in, it's like, you're not on the cap table, right? This is a stolen asset. You don't get it. So my point is, real asset token cybersecurity threats of not your keys, not your coins, is not the same risk. It's just the nature of real assets. It's not the same risk. So that's a big thing. That's a big bonus. I'm getting a bit of a sore throat. Been talking for an hour and a half. I'm just going to keep going. Otherwise, I have to come back. Hope you guys are still awake. Here we go. What do we got here? Number 4. All right. Let's move quickly through this. Types of RWA, actual RWA tokens, right? Real world asset equity tokens, not crypto. What do protocols do? What's the ecosystem? All right. So I've gone through the 5 values. Really important if you're thinking about investing in the space, investing in platforms. Like, what's my advice to people? Go and sign up to a couple of platforms and follow people you think are legitimate and do something, right? It's a journey. Set up a wallet, pass KYC, buy an equity token, see what works, see what you like, put in small. We made it 1 USDT. There's no excuses not to get onto IXSwap and start becoming an RWA investor, right? And I'm not saying just use us, but that's how you get started. That's how everyone got started in crypto, right? Everyone wanted to own Bitcoin at 8 cents. Okay, well, we might not be exactly that same time in life, but we're in the early stages of RWA industry. So if you really want to capture the value, start getting your fingers dirty and wet, whatever the terminology. Start now, and then build on your knowledge, build on your base. Just like any of the best crypto guys started early, they got ripped off, they lost coins, they got hacked, That's the journey, right? So get started. Products. Again, RWA utility tokens are not the actual real world asset tokens. So let that sink in. Oh, this has been designed up. Okay, so let's just talk about that, right? So let's talk about the concept of, for an RWA utility token, let's talk about IXS token, right? IXS token, buy it on Uniswap, buy it on centralized crypto exchanges. It's our BNB token, it's our Uni token, it's our platform token, right? You can stake it to get rewards in RWA tokens. You can stake it, you can use it to get discounts on fees. It has all these utility uses, but itself is not equity, it's not debt, it's a cryptocurrency. There you go. And there's the aspects here. Let's talk about real asset equity tokens that used to be called security tokens. That terminology was easier to explain. easier for people to understand. It's the representation of equity or debt in a product or a platform, in a share in a company or a fund. Right? You have rights, you get distributions, you own this, and then and it's this whole world of trillions of dollars of real asset tokens that are being tokenized, right? Debt and equity, real estate, private equity. So that's the difference, right? There's a very big difference, right? Utility tokens, security tokens, and again, if you just joined us, the RWA space has different types of tokens. The RWA utility tokens are cryptocurrencies. They're not actually real-world asset tokens. Real-world asset tokens are on the platforms. Share of an equity VC fund, share of a real estate fund as an equity token. That's a real token. That's a real-world asset token. All right, I think I've said that enough. Okay, yeah, so utility token, IXS, staking mechanisms, use it for payments, people are pooling against it, it's used for rewards, etc. And this is interesting because I sucked out just if you Google real-world asset tokens on, sorry, if you go to CoinMarketCap or CoinGecko and you ask for the real-world asset tokens, they don't list any actual real-world asset equity tokens. They only list the cryptocurrencies. They launch the utility tokens of the platform. So, sorry, it's a little bit hard to see here. So, Mantra's got the biggest market cap. They're playing Real-World Asset Protocol. Again, you can say that all you want, but it's not adding any value unless you plug in the licensed venues. But again, $4 billion market cap. And sorry, just 1 second. I got 2 puppies. They want to get on the podcast. They're not gonna add any value. So you've got again, the Mantra utility token of the protocol. That's what that is, right? You got Pendle Finance. Those guys seem to do a good job. The Pendle token's the utility token. It's not an actual real asset token. Who else have we got? Paxos Gold. That's tokenized gold. That's a real asset. That's actually real asset token. It's not a utility token, I think. Polymesh, that's the utility token of the Polymesh platform. Who else? I think Centrifuge, Clearpool, we're working with those guys. It's even hard for me to see here. Proppy, I met those guys a long time ago. IXS, utility tokens. So again, the super majority here, maybe besides the gold one, these are the utility tokens, but you can see here why it's confusing people because it says the top real world asset coins. Yeah, so this is the world we're in. It's what people have to understand. There's a difference, right? And essentially, I guess, why would you buy any of these ones? I guess you believe in the service they're providing. So those you believe those platforms will generate real businesses. They are real businesses, and therefore their utility token will grow and grow, like the BNB token is for finance, right? That's what IXS token is for us. And a long way to go, right? Like most of us are just scratching the surface here. And then, and by the way, I'm going to stab in the dark and say there might be 1 or 2 other groups out of this list that has a license besides us. And people can correct me if I'm wrong. I can see 1 or 2, but everyone else is completely unlicensed. So that's a big difference and why we think we've got a big edge. But we support, the growth of the whole industry. All right. Real world asset equity debt tokens. So the actual real world asset tokens. And if we as an industry can work this out, separating terminologies, please come back to me because it'll save me a lot of breaths and explanations. So what do we got here, right? Stablecoins, they're the OGs of real world asset tokens. Massive growth, growing faster every day. More people coming out. Visa's bringing out one. PayPal's bringing out their own stablecoin. Mastercard. Platforms, it's just exploding, right? And these are really just tokenized dollars, right? Massive use case. What else we got? So here's recent snapshot from RWA.xyz, great platform, as are the STO market guys who are now doing the RWA association. You can see here this growth, right? It really just, we started in 17, 18, which is, you can imagine a line. It doesn't really exist. So we were a bit early over there. Not a lot going on. Again, that was the infrastructure, right? 2017-18 begins. So by 2021-22, we finally got some infrastructure and we got more use case, real use case, and that's when the treasuries came on. And you can see here this is really the surge in the last couple of, and now it's really gonna take off. So this is good visual representation, and this also doesn't include most of the private market stuff like startups and venture capital funds, which is all now really coming to fruition. BlackRock's token, right? Initial minimum investment 5 million. So this is for accredited investors and high net worth investors only. That is what it is. But people, I think that's what you need to understand, and you can make your own decisions. If you're buying an RWA utility token of a platform because you think it's amazing and you can't buy the actual real world asset tokens, that sounds a bit strange to me. You might just think it's good business, fine. What we want people to do is actually buy the real world asset tokens, and therefore, if you're actually buying the IXS token, there's a much bigger, greater use case for it. You can use it, and you're helping generate revenues for the business, and it's available for everyone, unlike 99% of platforms. But again, this is just for everyone to understand what's going on, and everyone's free to do whatever they want. Tokenized debts. Okay, this is growing a lot more as well. I think types of loans, trade finance is a massive use case. Private credit, private debt, I guess, is buckets. Again, it's been called private for reasons. Private because it wasn't publicly available. It wasn't transparent, wasn't seen. It's these huge amounts of money now coming on chain. It just completely opens up the opportunities for the investors and completely opens up the distribution channels. And a lot of these returns are very, very strong, right? A lot of these private assets, private equity, private real estate, private credit, often paying 10 to 20% returns annualized, right? With collateral backed. And everyone might think, well, wow, that's amazing. How come I never heard of that? Because it's usually only for the really rich people. That's how the world's been built. So we're hoping to really crack that model and run alongside, the DNA of what crypto is, which is this whole new financial system for everyone. And we're like, well, let's bring the whole new real world asset tokens for everyone. That's it. That's what we spend our days and nights working on, to try to continually chip away at that and make that a reality for everyone. Commodities, all right? Tokenized commodities, these numbers are growing rapidly. We're speaking with groups now about two different $1 billion groups, tokenized $1 billion carbon credits, $1 billion gold, $1 billion commodities. Again, for all the people with stablecoins and all crypto guys can come and buy these. And I would say this now before I forget. We're now going. Let's just say this: professional investors and raw power, great people like that, helping to educate community and whatever, are telling me we're going into this new bull market. It looks like that from everything that we know. Real asset utility tokens are doing really well, right? What I think is going to happen is we're going to have this bull market for crypto. We're going to bring in 3-4x times the capital. We're going to go from 2 trillion to 10 trillion. And then there'll be another bear market, because that's just the cycles of crypto. It won't be as far down, but it'll be something similar. That's when I think we're going to see, we're already seeing a boom in this space, but that's when I think we're going to see a boom in actual real world token volume, because so many people are going to sell out of their crypto, and then they're going to be sitting on their USDC. Instead of 150 billion, instead of 150 billion or whatever it was 2 years ago, it's going to be one or 2 trillion of stable coins, all looking for yield. They're going to want private credit at 10%. They're going to want treasuries. They're going to want this. And then I think that we will see the first bull market for actual real world asset tokens. See if you can get your head around that. What's next? Gold. Rich Tier, friend of mine, way back started this. There's tokenized gold coming out. There's digital tokenized bonds. DBS, the banks are doing it. Obviously, what's actually more interesting is PDAX, the biggest crypto exchange in the Philippines, been tokenizing bonds. I'm going to give a summary of what I took away. My knowledge was bonds in the Philippines are only available for a couple of 100,000 people. There's millions of people in the Philippines. They started tokenizing on their crypto exchange, got securities licenses, and then brought the same amount of people almost in a very short period of time. In a couple of months, they brought, let's call it 300,000 people bought bonds because you had to be rich and accredited and all the usual BS. Then PDAX launched them, much smaller shares and quantums on chain, got a license for securities, and brought in 6 months or something, don't quote me on the numbers, brought an equal amount of buyers. So they might have been smaller, but like they doubled the size of the bond buyer pool just like that. That's incredible. That's one of the stories of many unfolding around the space. Here is, we were actually involved in tokenizing the very first onshore Singapore fund vehicle with an MAS fintech grant with UBS, State Street, and PwC. You're now seeing this real evolution of fund tokenization. Securities in the US is one of the leaders there. They've been tokenizing stuff with BlackRock. I think this came out today, you can use your tokenized treasury and you can use it as collateral and borrow, go and earn more yield in DeFi. I've got to dig into that. But essentially, we've just connected with the Boston Consulting Group, Aptos and Invesco, big fund administrator, did a recent report on tokenized funds and the value proposition and the nuts and bolts. So we were the first guys out in Asia to do anything in the space, and now you're seeing that the multi-$100 billion fund managers and fund administrators being like, all right, now we're in, right? So just this is where it's going, right? What's this? This section we're just running through different types of real-world asset products. Again, most people in the RWA utility token screen don't have any products, right? And some of them have one, but like this is all the stuff that at least we've been working on. You can access through our platforms. This is an earn product, so put in USDC and earn 4 or 5% interest. You can get daily redemptions. It's an incredible product, right? Built for people that are sitting on stablecoins that want short or long-term yields, right? Incredible stuff. Instant deposit. It's amazing. This was the tokenized fund, the investment vehicle. We got Coach K, who's a well-known crypto trader influencer. He's also an investor in the business, and with him in partnership collaboration, we tokenized the vehicle very fast, very very low cost, very quickly, and people could come on IXSwap and anyone could buy one USDT to be part of their very first VC fund. It was incredible. We've got 380 investors in 500,000 USDT in just a couple of days, and then we created a liquidity pool. So here is a tokenized vehicle, like everyone can access it. That's already up like 35% this year, and there's trade. Like this is one of the most exciting things that we've ever done, and this is the whole VC 2.0, right? And this is available now live, and then we're doing a bunch more coming. And who really benefits from this? People from emerging markets, as in they're also the ones that really benefit from crypto. I mean, everyone can benefit, but like they get a big jump because their capital markets aren't there, their investment opportunities are not there, their banking systems are not there. So if you're in Indonesia and you're a retail investor, or Philippines or Nigeria or whatever, like very very rare that you'd be able to invest into a venture capital fund. I mean, typically they want, again, bigger investments, credit investors. You need to know these people, whatever. Like, and the minimum investment's high, right? $50, $100, $250 million. We're making it $1. Everyone can do it, and it's the same outcome, if you will. Same outcome being it's a professional person investing into an asset class they know to get outsized returns, but they're allowing everyone to share in it. So it's really amazing, like really game-changing stuff. Super excited by that. It's the best performing actual real-world asset equity token in the world ever, in the history of the world. And people can fact check me. What if 30% this year alone? Most real-world asset tokens are treasuries 5% or fixed income or whatever, or they haven't had any exits, or it's a startup that's got no new valuation yet. Anyway, moving on. Private credit, right? So these are private credit, loaning money, short term, strong interest rates, asset backed. We're doing we're coming down the pipeline. Invoice financing. You tokenize a company's future revenue that's guaranteed by the invoice that's coming. They'll pay you a higher interest rate to use the money now, and then in 3, 6, 1, 2, 3, 4, 5, 6 months later, you'll get the money from the invoice. This is an industry that's massive all over the world today. It's just on paper. So this is the opportunities coming. People tokenize a diamond, a fund full of diamonds, right? So you basically buy a share of diamonds. TradeFlow, a good group that we work with, they fund commodity purchases, right? So physical commodity finance. What does that mean? I'm not an expert, but essentially, there's all these goods and services being traded all around the world, and then there's different time frames for it. So they can loan money to people that might put something on a ship. It takes 2 months to get to the other side and get sold, as I guess one use case, and then they'll pay you some interest for that period of time, and then pay you back at the end. So again, this is this whole new world of assets coming, like, and really strong returns. Again, like people would say 8.25. Wow, it's pretty interesting. Yeah, very interesting, right? Like that's double the treasury rate on USD at the moment, I guess, give or take. Most banks around the world are giving people less than 1% interest, and this is, on good platforms, with good companies, you can start to, get in the returns professional investors get, and that's a big goal for us to do that. ETH staking fund, corporate bonds. This is a tokenized whiskey fund, right? Wave guys. So buy a bunch, set up a company, buy a bunch of whiskey, let it sit for 5 years, and hopefully get a 20% annualized return, because it's a commodity. Whiskey going up in value, right? So again, like buy that as a token, minimum $1. Awesome. And also, where would you ever get access to this stuff unless you got a friend who loves whiskey? So the accessibility is completely changed. The quantum of investment's completely changed. The use case for the actual tokens completely changed. Yeah. All right. Look, I touched on this before. Protocols. If you're serious and you want to be a dominant RWA protocol player, and you want a lot of assets on your protocol, you need to integrate with platforms, or you won't win. We got Base, XDC, Kaya. We got BNB coming. ETH. Mantra is one of the big ones now. We haven't done any of them yet. Same message. Plume, Layer 2, RWA Focus. There's Red Belly coming out of Australia, and we're gonna be the first to issue RWA on Bitcoin BTC protocol, which is awesome as well. So again, we see protocols as networks, right? And we're in a multi-chain world. That is clear. I mean, maybe one day it goes just back to Bitcoin. Don't see it happening, but so we remain chain agnostic on our platforms. We build to where the business is, right? We're a real business. And so if you're a protocol and you have a network and you want to issue these assets, you got investors, and you need a venue, then it comes together, it makes a lot of sense, right? And so we got a lot of exciting stuff going on with all of these protocols. And then just to show, we're almost wrapping up, so it's going to be about 2 hours, which is good. That's way too long, but yeah, I've been talking as fast as I can. Okay, RWA ecosystem. So today, right, if I go back 5 to 6 years ago, there was like 3 logos on here. No AMMs, no data aggregators, no compliance regulators, no DeFi applications, whatever. Anyway, so you've got this whole infrastructure that's coming together over the last 6 years. You might have only heard of RWA last week, but a lot of guys have been building in the space for a long time, guys and girls. A lot of the new token launches for RWA purposes, they're brand new. Again, buyer be warned, they're not meant to sell anything, most of them, unless they get licenses. Most of them, they've got nothing, most of them go to zero. So, but that's fine. That's how startups in every industry work. But what you're looking at here is all these different players now, right? So you've got places to issue, you've got broker dealers that have the technology. So there's a legal way to issue and raise money. There's OTC where you can secondary trade. There's KYC and compliance groups involved now that are getting better and more knowledgeable. You've got blockchain protocols. All these groups trying to get people to issue. Avalanche is another one. Yeah, they do a lot in America. I think they want more and more real world use case, more and more real assets issued on their blockchains to make their blockchains more powerful, more usable, etc., and then drive the value of their utility tokens. Right, that's one of the key messages, which is why you really want to buy RWA utility tokens on platforms that you believe actually have a real business, because then there's a long-term real value for the token, right? Your use case. Distribution platforms, InvestaX, IXSwap, Securities, ADDX, although they're on private chain. Anyone who built on a private blockchain, that's proven to be a mistake. There were even private blockchains, Quarter R3 backed by 42 banks. We even tried to do it because we're chain agnostic. But again, if you just go build in your own walled garden, no one cares. If you just go build in your own walled garden, you're disconnected from all the other digital assets where all the power, the innovation, the capital is, right? So you've got to be on public chains. So that's a big mistake by a bunch of people, but that's up to them. Secondary trading platforms, AMMs. IXSwap's the only one that's got licenses to do that. DeFi applications, custodian wallets, right? So that's the ecosystem. And then again, back to different from the ecosystem, you have different types of actual real-world asset tokens. Private credit players, you can go and buy a tokenized private credit. I think here we got Clearpool, we got Maple, Centrifuge. They all seem to be doing good work. We're working with a couple of them. Tokenized treasuries and bonds, Ondo, probably the biggest guys in the market. But Franklin Templeton, all these other guys now, even the big Wall Street guys, but we're going to do tokenized treasuries and we're going to put them on Ethereum. Okay, great. We've broken the dam. We've convinced these guys what they need to do. There's real estate. Again, all these are different, singular products, right? Buy a real estate token of a fund or a house or building, carbon credits. So there's a lot of that. Again, the network has dramatically exploded over time, and it's growing every day now. So that's one of the big differences with having with time, right? And so this is the year. We're running out of time this year. Next year's the year, right? Get yourself set up. Follow, learn, read the materials, try to understand protocols, get on platforms, get on, set up, KYC, buy something, buy real estate, buy this, buy private credit, see what you like, see what works, get in liquidity pools. This is evolving, many more assets coming, many more use cases coming. And like any technology, those that invest earlier usually capture the most gains. You can also get a lot of arrows in the back when you're early. We offer a safe haven for that because you can put in $1 USDT. So if you lose that, you lose $1, right? We don't want anyone to lose money. But my point is, you want to get in there. You got to dive in and get your knowledge up to speed and get out there and read podcasts. And we do a lot of stuff. We do these IXS Academy. We do podcasts. We're speaking engagements. We've got education platforms. We do things like this podcast. It's taken me 2 hours to do this. I'm about to shoot myself. I've been listening to my own voice with no one else for 2 hours here. It's been so lonely. But anyway, we're working hard to try to make our community the strongest by knowledge and experience. So then they become dominant investors in the space, which is just about to explode, right? So thank you. If you've made it all this way, thank you. We appreciate your time. This is hopefully this was very helpful for you guys. I just said it before, but sign up on the platforms. We'll put a bunch of links in the notes. We'll split this up over time, but we'll have the main form here for anyone that wanted to stick it out. This was still a light version, I would say. I could probably dive into 20 areas there, much more deeper, but we're trying to be aware that not everyone does this for a living. So hopefully that was very, very useful and valuable. If it was, join the platform, join Telegram, join our X account, be part of the community, comment, advice, start investing into the different projects, get your experience up the knowledge. And we hope that you'll have a really exciting time on this. Thanks again to my team for putting this together. I am signing out. Thanks, everyone. Goodbye.